Hi, this is Zak Mir with the Bulletin Board Heroes on Thursday, the 17th of May. I chickened out in terms of looking at challenger acquisitions yesterday, and obviously the shares are well up today. The interesting point here really is the break of the initial May resistance at 0.5175. Above that, we're looking for the stock to progress towards the top of this broadening December triangle formation at 1 pence. Obviously, the initial target there, the 200-day line at 0.75. It would be nice if the stock got up above that 200-day line, as you can see that it hasn't been above that for well, nearly a couple of years. So a trend change could be in the offing for Challenger. The other plus point is the unfilled gap to the upside that we had at the beginning of the month, the so-called rocket launcher type of formation, just below the 50-day average of 0.39. So looking quite sprightly there for the stock after a very torrid decline. Next stock, another one where there's a decent volume today, Canadian Overseas. Again, another stock which has been hit rather hard after being a private investor favorite. You can see that with the black lines there, we had a converging triangle, falling wedge effectively, with the resistance there at 0.51, the 50-day moving average. And while we're above that, looking for that initial 200-day moving average target, 0.72. Best case scenario, similar to Challenger in the sense that we could hit this red resistance line from December towards 1 pence over the next month as a best case scenario. But watch that 50-day line as your stop loss. Next up, a stock which haven't looked at before, but seems to be doing rather well. That's Live Company. We had the weird gap to the upside last year. Since then, we've consolidated well we're at and above the 200-day moving average, currently at 30 pence. Still need to break this 40 pence level, which has been slightly problematic over the recent past, but it does look as though we're finally ready to jump gap higher today. The ideal scenario is that over the next few sessions we remain above the 50-day moving average at 35 pence, so that we can retest 50 pence plus 2018 resistance over the next few weeks. Obviously, we don't want to see this stock back below the 200-day line, the black line there at 30.94. Next up, a stock which I interviewed overnight, in fact. It was with Eddie Gonzalez, the CEO of Maya Energy, and it's worth listening just to hear the difference in the way that we both speak English. As far as the charting position is concerned, you can see that we had the push higher in November through the 0.5 level up to rather a penny at best. Since then, we've had a nice, healthy sideways consolidation. Perhaps a little disappointing that the stock hasn't taken off earlier, or rather in a more aggressive way, but it looks as though we've got a resistance line to chase there from November, heading towards the 1.2 level. And if we break the area towards zero point 0.8 over the next few days, we could unleash a reasonable rebound for the shares towards the 1.2 pence level. Nice bounce for the RSI as well off the neutral 50 level over the last few sessions. But really, the big issue here, or the big event here, would be to break the 0.8 level on a weekly close. Moving along to another stock which private investors are looking at hungrily at the moment, and that is Tullow Energy. Nice push here again, another stock that I was looking at earlier in the week, but wanted to make sure that it was on its way. 0.9 pence, sorry, rather 9 pence, the key level there, the trigger level, and we had a good end of day close above that yesterday. Obviously, everybody else seems to be waiting for that 9 pence level to be broken, hence the push higher today. We've got a line of resistance there as well from the start of the year, so that's been broken. Next target, or the ideal scenario now, is that we have a weekly close above the 200-day moving average at 10.2 pence, and that takes us back for an attempt to retest the best levels of the year at 17 to 18 pence over the next 4 to 6 weeks. At the moment, any dips towards 9 pence regarded as a buy opportunity, and only really back below the 50-day average, 8.39 pence, would question the breakout scenario after such an extended base in the 7.5 to 8 pence level for much of this year. Finishing off with tertiary minerals. And here you can see that we had the breakout of this converging triangle in the middle of last month. Slightly disappointing that we haven't had more fireworks here from the stock, especially given the way that the 200-day moving average is rising and has been rising since the beginning of the year at 1.13 pence. And the stock is holding well above, well at and above the 50-day average at 1.3 pence. Ideal situation here, a decent end of week close above 1.5 pence to then open up 2 to 2.5 pence over the following 1 to 2 months. That's it from me. Final bulletin board heroes tomorrow for the week.